There are 5 investing rules that I've always tried to follow. So whether you're a new investor or an experienced investor, these are 5 rules that will help you not only grow your wealth, but more importantly, keep the wealth that you've grown. Also, while you're listening to my tips, be sure to comment down below some tips that you follow throughout your investing journey. My hope is that we can all learn from each other down in the comments below. Tip number 1 is set it and forget it. That pretty much means you don't want to invest money that you're going to need in the short term. Now, typically I recommend that people, have an emergency fund before you even get into investing, because you want to kind of look more in the long term whenever you're doing investing. Whether you're, swing trading, day trading, whatever the case may be, you want to keep in your mind that, hey, I'm investing this money and I don't intend to take it out should anything happen in my regular life. And I think what that ends up doing is it helps you take the emotion out of your actual investing, right? It keeps you, looking at it more objectively, as opposed to, should the market dip down a little bit, you getting nervous and thinking that you're going to lose everything. Tip number 2 is no pain, no gain. Okay. Now, what I mean by that is that you want to take calculated risks. Okay. Don't always try to do things that, are considered the safer bet if you want to see large gains in your account, right? Now, there is a path that you can take where you can, take the safer road and continue to see your account grow. But if you want to see that exponential growth, right, over the short term, that's whenever you got to take some sort of calculated risk in your portfolio. Now, I'm typically in this boat and I'll take more calculated risk. And the reason why I do that is because I know, especially at a younger age, when I'm currently in my 20s, I know that because I'm in my 20s, there's certain risks that I can take that I'll be able to recover from before I reach retirement age, right? Or before I get older. So any risks that I take that don't pan out, I know that I'll be able to, recover those losses that I've had in my account. I have, let's say, 40 years to make those recoveries. But just to clarify, I do not take large risks in my portfolio, right? I'll typically, try to take, let's say, 10 to 20% of my portfolio that I'm risking, right? Into, bets that I'm not 100% sure of. Now, that allocation is really going to depend on what I'm doing with the remaining 80 to 90%, right? If I have a good portion of my portfolio in let's say bonds, which I don't typically do a lot of bonds, or I'm in cash, then I'm more likely to actually want to do something even, want to take more risk with a larger percent of my portfolio, right? Getting close to that 20%. Now, tip number 3 is if I don't get it, I won't get it. Okay, and what I mean by that is I don't invest in anything that I don't fully understand. Now, this is a big one for me personally, especially seeing what's been going on in the investing world recently, right? I will typically not invest in anything that I don't have full comprehension of, right? So that has to do with, of course, stocks, bonds, ETFs, even up to options. And recently I've been looking at getting into more like Forex, right? But I'm big into understanding fully what's going on and what happens even behind the scenes to help me better understand where my investments are going into and what I could potentially do to see even greater gains. This has been hammered even more in my mind, especially seeing kind of what's going on in the landscape in terms of people are jumping into, things like crypto, right? Or NFTs or whatever these new different trading techniques are. And when you talk to people who are invested in these things and they try to tell you, why they're invested in it, typically all you hear from people is things like, yeah, I'm investing in it, it's gonna go up, right? But they can't tell you exactly why, right? Or the reasoning behind it going up is more people are gonna get into it, right? So I'm not advocating that you shouldn't invest in crypto, you shouldn't invest in NFTs. I'm just saying that I'm more careful in my own investing strategy of making sure that I understand what's going on in terms of, how that investment vehicle works before I actually jump into it, full steam, right? And I'm not saying that everyone who's in crypto doesn't understand or everyone that are in NFTs don't understand. I'm just saying that there's a good portion of people who don't fully understand that vehicle, at least that I've spoken to. Now, tip number 4 is don't put all your eggs in one basket. Now, it's easy to fall prey to, all those different posts and things that you see online or on social media of people investing in, pouring all their money into one investment and making like a 300x return, right? Or 300% return. So they just 3x their money, or, you're even seeing crazy returns where someone said, oh, I put, 20K into this thing and now it turned into $1 million or whatever the case may be. But you got to keep in mind that you might be seeing that, but how much of the other side are you going to see, right? People love to talk about how much money they're making, but nobody's going to want to talk about how much money they lost, right? So the way I look at it is, for each person that you see that says, oh, I turned $10 into $1 million or whatever the case may be, how many people are on the other side of that spectrum, right? How many people are saying, I poured in $1,000 into this investment, I lost everything. I put $100 into this investment, I lost everything, or whatever the amount may be. That's kind of how I look at it, right? I don't always look at, I try to make sure that I'm not getting that, the FOMO, right? The fear of missing out, where I see a lot of people saying they're making money that I want to jump in and try to make money too. And I just try to keep sound and kind of take a step back and look at my investment strategy and just focus on my own gains, right? Because again, you're going to rarely see posts or videos about people who are taking losses, right? You're not going to see that a lot. Unless, of course, you're looking at things like Wall Street Bets. Now, Wall Street Bets kind of has changed that to where now it's a community of people who like to show that they're taking, huge, possibly uncalculated risk, or maybe they're just, pouring all their money into one thing. And again, I don't really advocate that. And you'll see on that subreddit, it's almost become cool to post that you're losing money, right? And I don't know, we're in this weird world now where it's like, you're doing everything for the gram, right? Or in this case, for the subreddit. And people are willing to show that, hey, I just poured my life savings. I've spent the last 5-10 years building up a nest egg of 50K. I put it into this one stock and I lost everything. So I'm gonna post it on Wall Street Bets or any others, whatever other subreddits might be out there. And just to have people, be able to smile for the day, or whatever the case may be. If that's what you like to do, it's your money. You do whatever you see fit with your money, but I'm not looking for that kind of validation. I'm not willing to risk everything I've made to get validated like that. So I'm steering clear of all that stuff. And the last tip is mark your goalposts, okay? Now, what I mean by that is set goals for yourself and set goals for what you're trying to achieve, right? If you think of sports, right? In football, for instance, I played football for a large portion of my life. And in football, we always had an idea of where we were going, right? We always wanted to score a touchdown, right? Or score. So in our minds, everything we did was with that one focus in mind. We always knew, hey, we're trying to do this because that might get us to the end zone. That might get us to a touchdown for a score, right? That's kind of how you want to look at it with your portfolio. Have an end goal in mind, right? Oh, I'm trying to get from $1,000 portfolio to a $10,000 portfolio. And now you're going to have that goal, in your mind, you're going to say, hey, I'm working towards that. This is how I'm going to get there, okay? That's also going to help you. It's going to help advise you when you're looking at different trades or different trading styles to get into, or different strategies to get into, right? If you don't think that it's going to potentially get you to that goal, then you're going to be like, hey, you know what? Maybe this is not something that I need to be investing in right now. It'll be a lot likelier of you to kind of look at strategies as, is this going to get me closer or further away from the goals that I have? Now, if you want to see one of my favorite platforms for investing, be sure to check out one of the videos I shot on M1 Finance and how you can go about making sure that you take full advantage of that platform. Now, I want to thank you guys for taking the time to watch this video. Be sure you hit the subscribe button down below so you don't miss any of my future videos, and I'll see you at the next one. Peace.